Happy Thursday. Happy Thursday. All right. First, we just got to look. I got chilly, which is weird because it's like 75 degrees outside, but I think the air is on. So let's just love my new sweatshirt. It says 2020, the year tax season never ended. Okay. There's coffee in the AM, wine in the PM, me or any other CPA or accountant, including my entire team, crying at their desk at 11, I can't read upside down, 10. And I assume that's PM. So yeah, that's that. As always, we are going to give everyone a few minutes to jump on in while I banter and tell you about my week. This morning was fun. Me and the team did a photo shoot, hence why the hair is straight. And you might not be able to tell, but I did have makeup on a little bit. We did a photo shoot. It was a ton of fun. It was just great to see my team all together. It's the first time we've been together in weeks, maybe months, but definitely weeks. It was so good to see them. Shout out to Lindsay Green, who came and did our photos and then stuck around for probably longer than she expected and helped me with my YouTube videos. And then while I'm giving out shout outs, huge shout out to Jamie Troll, who is in this group, also the founder of her own group, Financial Literacy for Women Business Owners. This lady got to go meet Amy Porterfield this weekend and chat with her about her courses and her success and all the things. If you have no idea what I'm talking about, if you don't know who Amy Porterfield is, you don't know what DCA is, Digital Course Academy, if you've ever been curious about creating a course, a digital course, it is 2:00 Mountain Time. It is 1:00 Pacific. You have until 4 p.m. You should go check out Jamie's page and look at all the fun stuff they got over there. If you are already following her, you know who Jamie is, you know what DCA is. If you've ever been intrigued, go check out Jamie's page because the bonuses Jamie's offering, if you sign up for DCA through her, are crazy. Like, I would have to say the price or the value of her bonuses is what you're going to pay for DCA. So it's crazy. So crazy. All right. I was on time. I know that seemed weird. So I don't know if that means I should get started earlier or if people are so used to me being late that they're like, we'll wait till 2:05. All right. Back to my shirt. Just to let everyone know, tax season is not over yet. We have one more 2019 tax deadline. We'll talk about that at the end when I give you guys all the updates and deadlines and everything. But yeah, we have one more 2019 date. And then I can stop trying to juggle 2020 and 19 in my head. And I can just focus on 2020. So that will be a good day. October 16th. Can't come soon enough. I know a lot of you guys are excited because you are so antsy to start tax planning with us. And you guys have been so patient. I appreciate it. Thank you. I promise it will be worth the wait. Just because tax planning season is shorter does not mean I will not be giving you guys the same awesome service as if it was, longer or if we had two tax planning seasons. So hang in there. We'll talk all about it at the end. All right. More people are jumping on Facebook and I think YouTube as well. So we'll go ahead and get started. Just give my, spiel and we'll go from there. Hi, Amber. Oh my gosh. Love. Amber is a high school friend of mine, y'all. I'm not going to tell you how long I've been out of high school. I'll tell you. We would have celebrated our 20-year graduation or 20-year reunion this year. It's fine. I don't look that old, so I'm not ever going to tell you how old I am again. All right. Let's go. So y'all, I'm so happy you guys are joining me today. For those of you who do not know me, I am Bree Beers of Bree Beers and Associates, formerly Lippa Beers and Associates. I am a CPA with a goal to enlighten taxpayers and business owners on all things accounting and tax. I understand that you don't know what you don't know, so our team is dedicated to creating all the tools we possibly can to help you shed some light on that unknown, and we try to do it in an entertaining way. We'll see. So one of the tools we provide for you guys is our awesome Facebook community, Money, Tax, and Finance for Small Business. If you are a business owner or starting your business or thinking of starting a business, if you're not in that group, go over there. Go over there, get in that group, Money, Tax, and Finance for Small Business. And it's an amazing supportive community. We post daily tips, daily tricks. We have no, we don't. We have weekly trainings on Mondays at 9 a.m. Mountain Standard Time. And then we have Thursday Q&A and update sessions now at 2 o'clock Mountain Standard Time. So come join us for all the things. Finally, if you ever can't make it to a live or you want to find a past training, you can do so in our Money, Tax, and Finance group. If you go to the videos, all of them are there. My preference is to search through them on our YouTube channel. We stream live to both platforms. And speaking of YouTube, I told you we had a video and photo and video shoot this morning. We got some really good content recorded for our YouTube channel. So if you guys aren't on our YouTube channel, please head over there, subscribe, like, whatever all the things, because the content over there is just gonna grow like crazy over the next few weeks. I'm super excited. All right, today is updates and Q&A day. If you're with me every week, you're sick of hearing me say that we have no updates in terms of PPP forgiveness, any other stimulus news or decisions, because Congress has not passed anything. So we're still waiting on Congress. I have told you guys originally it was like they had to come back from Labor Day and we were hoping for the end of September, but now it's based on what I was reading last week. I'm not going to lie. I've stayed out of the news this week, but I have gotten no flashes, so nothing has happened. But not sure the end of September is looking good either for Congress to pass anything. It's extremely frustrating, I know, on so many levels, right? It's frustrating for those that are waiting to see if there's going to be additional funding, like another round of PPP funding, on an individual level, another round of stimulus. Because I don't know about you, but $1,200, that we got back in whenever we got it, didn't even cover all the expenses we had already missed, right, up to that point. So since then, it's been a couple more months. So some of us are waiting for more stimulus updates. Some of us are waiting for, news on our mortgage moratoriums and our eviction. So many things we're all waiting for from different avenues, right? So we're really, really wanting Congress to pass something. And what I was reading in a lot of the news outlets last week, you guys, is that they're now not sure if we're going to get something until after the elections. So fingers crossed that's wrong. Fingers crossed Congress realizes how important this is and gets their act together. But you can imagine what's going on right now. They're trying to create a budget, and I'm not making excuses. I'm not standing up for Congress. Don't get me wrong. Politicians, not my thing. But they probably think they're already super busy creating a budget and, campaigning for whoever they need to campaign for. So we'll see. We'll see. Of course, you guys know that if anything passes, you will be the first to know. All right. So, but the good news about that, you guys, is that we have plenty of room for Q&A. So much room. So I have 3, potentially 5, depending on how much time we have and depending on how many come in through the chat feed. So if you guys have any sort of tax or accounting questions, it does not have to be related to PPP. It does not have to be related to stimulus. It can be. If there's stuff that you want to talk about, shoot it in the comments. I'm happy to answer anything you guys have for me today. Otherwise, I'll just start going through the ones I picked out from my different groups and platforms. There's the word, over this past week. They're all really good. I'm really excited about these. So the first one I got says, I'm a real estate agent and I have to keep my appearance up to stay looking professional. Can I write off my manicures, my pedicures, my hair, my makeup, etc.? I get this question a lot, or I see it on a lot of different business platforms and Facebook groups and whatnot. And I get it. I get where people are trying to rationalize that expense. They're like, well, if I didn't have to look good, I wouldn't spend all this money doing so. But the IRS has straight come out, you guys, and specifically ruled in cases against people that have tried to take these grooming expenses. Grooming expenses are not, excuse me, grooming expenses such as the ones we talked about, manicures, pedicures, hair, makeup, are not going to be deductible to most business owners. I want to talk about a few caveats. First, there are a few industry exceptions that exist. Very few, very small, very niche, but they do exist. So for example, if you're a hand model, then your manicures are likely going to be deductible because that's part of your business. I'd make a good hand model. If you're a regular model, then your hair and makeup for headshots and gigs and whatnot would be deductible. All right. So certain industries are going to be able to have a little more flexibility in taking more grooming expenses as part of their regular, ordinary and necessary, right? That's our definition, ordinary and necessary. For the rest of us, those grooming costs are not going to be deductible. The exception that I have legitimately seen taken and won in court cases is grooming done for, say, a business photo shoot. So let's say today, if I had a professional photographer come in to do photo and video, had I hired a professional makeup artist or hairstylist to come in to do my hair and makeup specifically for that photo shoot, you can connect those two things as a business expense and legitimately take it. It's always super important that when you do these things, when you take any expenses you take, you guys, you make sure you document it correctly. All right. So you're keeping your receipts, you're specifying that the hair and makeup was for this photo shoot on this day, just making sure those things tie really well in case there is an audit. Okay. Excuse me. I am so sorry. So over the years, next question. So over the years, I've been doing my taxes and saving receipts for miscellaneous items like dinner, meetings, and food. Lately, some of them are starting to fade because they were on thermal paper. I get it, right? You have those old receipts and then they start to either smudge or they just fade like it's invisible ink. The question asker says, I just consulted with an accountant who insists that I still keep them even though some are literally blank. I wonder if it's okay to use a receipt scanner that exports to PDF. Would this be acceptable to an auditor? You guys, electronic copies of receipts are 100% perfect for an audit, okay? 100%. Some accountants they get stuck. They get stuck on keeping the paper because way back when, before technology, that was the rule. But all the new technology we have has brought things to a new, we're in a new generation now. So a scanned copy is completely sufficient for an audit, and it proves you're spending, it proves it more than a faded receipt, right? Like if you hand an auditor a faded receipt that doesn't show any date, any amount, what good is that going to do? So I suggest that you scan your receipts, or you take a picture or whatever. And once that's done, there's no need to hold on to the paper. Get rid of it. Okay. For those of you asking, I don't know if you are, but I highly recommend using some sort of receipt reader. So if you especially if you use QuickBooks Online, because they can actually integrate. So it can connect your receipt to your bank fee transaction. Very, very cool. But yeah, or, keep a PDF file with all of a receipt file with all your PDFs. All right. PDFs, totally fine. All right. Next, where do I deduct my health insurance premiums on my tax return when I'm self-employed? Another great question. So your health insurance premiums that are paid out of pocket, whether you pay them through your business or you pay them with your personal funds, either way, it ends up going on your 1040 tax return as an adjustment line. And the adjustment you take for self-employed insurance premiums is limited to your business income. When you're self-employed, let's say you pay $20,000 in insurance premiums this year. You have a family plan, high deductible, that's reasonable. $20,000 in insurance premiums for the year. But when you complete your Schedule C, let's say you would have to show at least $20,000 in net profit on that Schedule C to receive the full amount of the benefit of the health insurance adjustment. So let's say in the same instance that your business only shows $15,000 in net income on Schedule C. Then that health insurance adjustment is going to be capped at that $15,000. So your health insurance adjustment when you're self-employed is limited to your business income. So that's the case if you're a Schedule C. That's the case if you're a partnership, right? And when you're an S Corp, then it is limited to your W-2 wages paid from your S Corp, all right? Because remember, S Corps are just a smidge different. All right, I'm checking the comments. Hi, Jenkins. So Michael says, I've never called you Michael, except for on accident. If I want a small jackpot in Vegas, can I pay the taxes on just that through a local accountant, or do I have to include it with all my other stuff when I give it to my father's accountant next year? So I assume when you say small jackpot in Vegas, so I'm assuming you won enough to be receiving a W-2 gambling, W-2, I can't remember what it's called, but what is it called? I just drew a blank. I assume you made enough, you made over $600 that you're going to receive a form, right? Because I'm going to tell you that even if you didn't, you should still be recording all of your gambling winnings on your tax return, even though I say it with that tone because I know nobody does. I know y'all only report what gets reported to you on a form. And the answer is yes. You're going to have to give that to your tax. G, that's the letter, Wendy. Thank you. W-2G. I couldn't remember the letter. So your W-2G G for gambling. Come on, Bree. Get with it. Okay, so backing on up. So you get your W-2Gs, and those are going to get filed with your accountant regardless, Jenkins. So, I mean, you can make an estimated tax payment right now on those winnings. That's fine. But at the end of the year, you still need to turn in your W-2G to your tax accountant and then a payment confirmation for that estimated tax payment you made. So you can, if it's because you have the cash now and you want to pay it, go ahead. But otherwise, it can wait. All right, Ellen says, I'm in a blessings type group where if your name gets drawn, everyone gifts you $1 via PayPal, Venmo, etc. I won one week and I got $460. Do I owe any taxes on gifted money? Great question. Oh, such a good question. You guys, bringing it today. I'm so excited. So gifts are not a taxable event. Okay, let's talk about gifts real quick. So we hear about gift tax and gift tax returns, okay? And so there is currently in place a 5.6, Wendy will correct me if I'm wrong. It's like a $5.6 million exclusion in terms of, and that covers like lifetime gift giving, okay? So what that's saying is I can give up to $5.5-ish million away to any person without any tax consequence, okay? Once I hit that threshold, then they'll start paying taxes. There is a tax return required if a giver gives any single recipient more than $15,000 in one tax year, okay? So what that's saying is I can give anybody I want, family or not, up to $15,000 a year with no tax return needed. Okay, it's just, that's called the exclusion. Okay, so I can give that to my kids. I can give $15,000 to my mom, my dad, Wendy, Joyce, Greg, you, Ellen. I can give it to any of you guys. And if it's under that $15,000 an annual a year threshold, there's no reporting necessary. If one person gives another one person more than $15,000, then you do have to file a gift tax return. But there's still no tax due. What it does is the reporting instrument that shows that you're chipping away at that $5.6 million lifetime amount, okay? So back to your $460, no, nothing is needed there. And when it comes to gifts, you guys, and exchanging money, here's where I like to think, like, when is it taxable, when is it not? If somebody else is deducting it as an expense to their business, then you need to include it as income on your business, okay? But if there's no deduction being taken, typically that's not always the rule, but this is just kind of an easy way to kind of think, is this income, is it not? Okay. So as a gift, I'm not saying I'm not taking that as an expense. Yeah. So it's anyway, and even if it was, again, you're way under the exclusion. I tried to make that more complicated than it was. Ellen, no, you don't know anything. Just go with that. All right. So Joy says, due to COVID-19, I wear scrubs and PPE at work now. I'm a sole prop, so this expense falls under uniform production, right? Yes. And I'm not sure we've actually, I wouldn't call it uniforms. I'd probably call it, I'd probably make a separate line called COVID equipment and whatever, just to break that line item out so that if anyone, like, if I'm an auditor and I'm looking at a P&L and I see like COVID equipment and materials, and I see, like, I know I can associate that. Whereas if I saw uniforms and I saw this big line item, I might want to dig more. And there's no need for people to dig. So I think making a line item for all of our COVID, our scrubs, our PPE, our, all those extra things we're having to do now, or to wear and buy now, I might put under that. There's no right or wrong answer, Joyce. But the answer is you do get to take it as an expense. And you're more than welcome to put it under uniform deduction. There's no right or wrong answer here. Just if you do put it under uniforms I don't know what platform you use. I don't know if we've discussed that or not. But if it's QuickBooks Online or Xero, in the memo, I would definitely write, COVID PPE, COVID scrubs, something like that. Just, again, the more detail, the better. If an audit were to ever come. Let me just say, help us if the IRS decides to audit anybody in 2020. Like, go away. Just go away. Okay. All right, cool. So I think, let me just check. Okay, so I got your guys' questions here. Okay, we're good. So I got my 3 questions that have been in the group. I got your guys' questions here. Keep asking them, you guys. If, Wendy, Ellen, Joyce, I know y'all are here. There's some other people here. Even if you're not Wendy or Ellen or Joyce or Michael or Amber or anyone else that I've actually named, and you guys have any sort of tax or accounting questions, business or personal, I can answer them all. Put them in the comments now. We have a few more minutes. Okay, so StreamYard says Facebook user. I hate that, so I'm gonna sneak over to my Facebook group over here. FYI, we're using StreamYard, you guys, and so when I'm looking at my StreamYard comments, at the top it'll say to allow StreamYard access. So if you want me to know who you are, you can click that button. Otherwise, I can't even find today's live. It's fine. Anyway, Facebook user, you can tell me who you are in a minute. I'm an S Corp. I was planning on taking a distribution to pay for my daughter's last semester of college. Could I benefit anyway by handling this to a better tax advantage? Could I benefit? Okay, so I'm planning to take a distribution to pay for my daughter's last semester of college. Okay, so just always my disclaimer, as an S Corp owner or an S Corp shareholder, always make sure that before you're taking distributions, you're taking your reasonable compensation. So I'm going to assume that you've already taken your reasonable compensation, and that's, you're doing that, that's fine. And so you want to take an additional distribution above and beyond that, but that's already good, that's already reasonable to pay. Yes, you can pay for that. Is there any way I can better tax advantage? So the only thing I can think of, because by taking it, no matter where you take it out of, right? Yay, you're taking reasonable compensation. You're my favorite. Thank you. So the only thing that I'm just trying to think of what you can do from a tax point of view. Oh, it's LaRonda. Hi, LaRonda. I cheated. I went to Facebook. Depending on your state, you could fund a 529 plan, which those contributions are deductible on your state return, depending on if you're in a state that actually has state income tax. And then I think the holding period for most states is like 30 days. And then you can immediately take it out and pay her tuition. So you would get that, the tax benefit on your state level, which, I mean, in Colorado, that's 4.65%. So a $10,000 contribution is going to save me $456 on my tax, or like decrease my taxable income. No, $456 in tax. So it can be significant. That's really the only thing I can think of off the top of my head to doing that in terms of how you want to pay for that. Because you should, because you're paying, you'll get your education credit, because and that's a big one, because that's a credit, not a deduction. So make sure you're taking that. But that's it. I think you're handling it right. So spot on, LaRhonda. You're on it. Okay. What about putting her on payroll? I actually have a training in a couple of weeks all about paying your kids. And I'm guessing she's not under 17 because she's going to college, but I am going to talk all about paying your kids as a business owner to work in the business. But yes, you can also put her on payroll. So let's see what are the benefits to that. So let's say you pay her $10,000, make sure she is doing something in the business. You get in a lot of trouble for putting anyone on payroll who's not necessarily working in the business. But if she's maybe working part-time, you can justify. If you can justify paying her however much you're paying her, let's just say $10,000, because I like it. It's a nice, easy number. So let's say you put her on payroll. She works for you over the summer or the holidays or whatever. You pay her $10,000 via, so it's going to be a tax deduction to your business income, right? You will have to pay payroll taxes, then she'll get a W-2 for that $10,000, but she's going to be in a much lower tax bracket, I assume, than you are. So that's great. Great thinking, LaRhonda. I wasn't thinking that direction at all. I was just focused on college. So that's a great idea. Then also, if you do put her on payroll, you could then you could start a retirement fund for her, or a retirement plan. I don't know what you have in place, or if you have other employees. This is always different when you're an S Corp. But if you have any sort of retirement, you can contribute to her retirement, which would also be a deduction to your business and tax-free income to her. So many good ideas. Okay. Oh my gosh, so many things. So Joy says, excuse me, I think it's time to go from sole prop to LLC. I have made profit for the last few years. We are opening another office in December, and I will need to hire an associate doctor to work in my current office 2 days while I work 2 days at a new location. Should I switch to LLC now? So one of the videos, funny that just one of the videos I recorded this morning is verbatim, almost, your question, Joyce. So it's, when do I know to file an LLC? So sole prop versus LLC, from a tax and accounting point of view, same thing. They both go on your Schedule C. They're taxed the same way. Creating that LLC is you're creating a legal structure, and you're creating what's called a corporate veil, and you're separating all of your business from you personally. Not a lawyer, but especially if you're going to hire people and you're going to be, you're a doctor in an office, you have patients, right? Right? Sorry. If someone sues you as a sole prop, they can go after all of your personal assets, your home, your car, all those things. Okay. If you create that LLC and you do your due diligence to keep those personal and business assets separate, called the corporate veil, all right, then they can't go after your personal stuff. It stops at the LLC. Okay. Again, not a lawyer. It's one of those things, like I know this so well. I'm confident I'm right, but I'm not a lawyer, so I can't give legal advice. So yes, so I think switch to an LLC as soon as possible. You won't have to file 2 tax returns. or two. You might have, do you have a tax? Do you have a CPA, Joyce? I don't know. If you don't, let's talk. If you do, talk to your CPA, because there's certain ways to make this transition easy from an accounting point of view. Okay, let me scroll on up. Oh, it's already 2:30. Okay, I can't stay too long. Usually I'll hang out with you guys for an hour, but I have a 3 o'clock call and a 3:30 call and a 4 o'clock call and a 4:30 call and a 5 o'clock call that I am not even ready for. So, oh, Wendy says, what is privilege tax? The privilege of working in Denver and get hit with that 695 check. So, Wendy, so privilege tax, I believe, is that you're talking about like OPT and also called head tax. It is a local, it's an employment tax or fee charged on local levels. So in Colorado, I know Aurora has it, Denver has it, Greenwood Village has it. That's my 9-mile radius. So that's all I know. And it's a per employee fee that you pay every month. What is it? I don't know. It's just a tax I've always paid. And I'm pretty sure it's just another bucket of taxes. But I'm guessing it's specifically designated in each city or locale to be spent on certain stuff, which I think is why it's broken out. Okay, let me scroll up because I think there were some I missed toward the top. Oh no, maybe not. Maybe that was all. Wendy, how many years? Oh, Ellen says, how many years can you take a loss in your business as a sole prop before you have to change it to a hobby business classification? So the hobby loss rules, Ellen, say that you got to show a profit in two out of any 5-year period. So that means if I start my business and I have a loss in 2020, and I still have a loss in 2021, and I still have a loss in 2022, that the IRS wants to see a profit in 2023 and 24. That said, showing losses for more than 3 out of 5 years doesn't automatically flip on a switch and say, oh, you're a hobby, okay? If you are legitimately in a business with an attempt to make money, with the purpose of trying to make money, and you can prove that, right? By proving that means you have a separate bank account, you are taking care of you're keeping your business finances separate, you are, advertising, you're actually making money, right? Just because you have a loss, like for me, I have had plenty of years where I'm making tons of money, but I'm also spending tons of money, right? And so the 2 of 5 years, the hobby loss rules are kind of a first tier, right? So it's like, okay, if the IRS is like, okay, this business is showing this loss for the umpteenth year in a row, what's going on? Then they're going to dig a little deeper. There are lots of businesses, especially, that have been starting. Sorry, rambling. I just want to say, Ellen, and I can't remind me, Ellen, because I have 2 Ellens who I started chatting with very similar in time. Remind me, Ellen, what we do. Photographer? Tell me in the comments. But what they're really looking for is, or what they're really trying to weed out, you guys, are the people who have a side hustle, but it's not really a side hustle. They're not trying to make money. What they're trying to do is they're trying to legitimately yes, Ellen, you're my bunny therapist. How do I forget that? Gosh, sorry, squirrel. It just made my heart so happy. Now I forgot what I was talking about. Hobby loss rules. So as long as you can show like, hey, look, I have money coming in, I am trying to make money. And then when you look at your expense side, and they all of your expenses, that's where it is. Your expenses are going to probably be a little more scrutinized if you were in an audit. They're going to be like, are these ordinary and necessary and reasonable? Okay. So, if you're only making 10 grand a year, but you're spending $8,000 on meals, like, yikes, right? So just make sure you are in the business of trying to make money. All right. Joyce. Oh, wow. Yes. Yay. Joyce, I need a new CPA. I'm going to go with you. Yes. Love you. Love hearing this. It makes me super duper happy. Okay. I think we're good. Whew. Okay. I'm going to just go to my normal closing announcements real quick. If you guys have any other questions, what I'm going to ask you guys to do is actually post them in the group. And that way I can either answer them next week or I can type an answer to them sometime between now and next week. But at this point, I'm going to not close off, but I'm not going to look for any more questions here. So don't post them here. All right, so closing announcements. Last reminder that there is one more 2019 extension deadline coming up. Well, this one's old. This is talking about September. Hold, please. Who's writing my notes? Okay, so I don't know where I put my new ones. Anywho, September 15th. So if you were an S Corp or you're a partnership and you did not file your 2019 tax return, you're looking at penalties and interest. You can still file. You can file up to 3 years late, but there are penalties and interest. Okay, if this is you, if you're like, I am late, that is me, we can help you. We just can't do it obviously by the deadline because it's passed. And it's actually between now and October 15th, we're working on our 2019 individual tax returns. So that's all of you that might have a Schedule C for your business. So your deadline is October 15th. If you're a current client and you're watching this, you have until tomorrow to get your stuff to us and guarantee the October 15th filing. All right, if you come in after tomorrow, we're gonna have to talk. If you're a new client looking for 2019 tax prep, we're past our deadline to take on 2019 clients and guarantee that October 15th deadline, okay? So again, if you're okay filing late and that's not something which if you don't owe money on your personal return, it doesn't matter if you file late, but it doesn't. There's no penalty. But we can talk. Just know that we cannot take it on any more 2019 tax prep clients with a guaranteed October 15th deadline. Tax planning. I've been getting so many messages about tax planning, and I'm so excited that y'all are excited. So this year, it will begin in November. November and December will be all about year-end tax planning for y'all. You guys have been waiting so patiently. There was no mid-year tax planning, and y'all are okay with that, and I appreciate your patience. So if tax planning, 2020 tax planning is something that interests you, definitely make sure you're on our email list, because those weekly emails in the next few weeks will start dripping out the information for what our tax packages look like, how to schedule your appointments, how to figure out which tax package is right for you, all the things. All right, so they're going to start making an appearance probably early next month, and then you'll see it all throughout October. And then at the end of October, you can start scheduling, and then November, it's go time. All right. Finally, for my PPP and EIDL borrowers out there, don't forget, we have 2 different options to help you guys out. We have our personalized PPP strategy sessions. These are 30-minute Zoom calls, you, me, that's it, where you get to ask me your very industry specific, very business specific questions about your PPP loan, your EIDL, maybe how you want to spend the rest of it, when you have to apply for forgiveness, is your application right, all the things. 30 minutes, one-on-one, you just get me. And if you can go this speed, I can go this speed. So we can have a super productive 30 minutes. You can also use this time for your EIDL questions. We've already started scheduling, or we've already not started, we've already had strategy calls, and they've gone so well. We're getting great feedback. I'm really excited. I know that once Congress finally passes something, I know a lot of you will come in more and more, but you don't have to wait. We can talk about it. Anyway, even if you have a CPA you love, okay, and you don't plan on leaving for tax work, that's fine. I can still help you with your PPP stuff. Like, I'm not going to try to steal you. You can just come get your PPP help and go back to your CPA you love. I just know that there are a lot of accountants who haven't been keeping up with the PPP and the EIDL stuff. So if you have this, you definitely need to be working with someone that knows I almost said a bad word, that knows their stuff. It's my channel. I can say what I want. I should have said it. Doesn't matter. So just reach out. So schedule those. And if you're not a DIYer, right, and you're just like, I don't want anything to do with completing the forgiveness paperwork, I just want to hand everything off, and I want someone to do it for me, we got your back there too. Obviously, that's going to be more expensive, but schedule a free consultation on our website. We'll talk about price, what those services involve, all the things, and figure out if that's a good fit for you. All right, cool. So I'm a little bit over. Thank you guys for hanging out with me. Thanks for staying and a little longer than normal. And again, if you have any further questions, go definitely post them in our Money Tax Finance group. All right. If you're not over there in that group already, go join. All right, you guys. Otherwise, I will see you guys Monday. Monday, you guys, we start our retirement training series, 3-part series about retirement plans and how to, not the details because I'm not a financial advisor, but kind of the differences of what's out there and the tax benefits of each, because that's what I know, right? I don't know financial planning, but I know tax planning. So join me on Monday for part 1. I think we're talking about IRAs. Don't quote me on that. I think so, though. All right. Otherwise, you guys have a fantastic weekend, and I will see you on a Monday morning.